The first of our final two sessions this afternoon, if I can get everyone's attention, the first of our two final sessions is taking a look at the regulator view of greenwashing. As ESG issues become more prominent, the risks grow that organisations may make misleading claims and greenwash their climate change offerings. So what do super funds need to know about how regulators are viewing this? Joining us this afternoon to offer some insight is Claire Labouchardiere. Claire is the Senior Executive Leader Corporations at ASIC, where she leads the team with oversight of corporate disclosure and governance issues. For the past 5 years, her team's had responsibility for considering climate-related financial risks. Before joining ASIC, Claire was a solicitor with Gilbert and Tobin. And to chair this session, please welcome back Louise Davidson.
Thank you, Lee. Good afternoon, everyone. Good to see that people are still hanging in there. We are on the home stretch now. So, as you know, regulators globally are increasingly focused on greenwashing, where false impressions are created on environmental or social claims that are made about a product or an investment or whatever it might be, a financial service. And with the growth and recognition of ESG, I think this is a welcome development, and I guess it's also a reflection of the importance of ESG, particularly in the minds of consumers, because it demonstrates that consumers are taking the claims made by product offerers seriously. In the US, the SEC has proposed 2 new rules described as giving more clarity about investment funds that take ESG into account. And in Europe, the Sustainable Finance Disclosure Regulation sets requirements on sustainability-related disclosures, both at entity and product level. And in the UK, the Competition Markets Authority has developed the Green Claims Code. We've also seen regulatory action internationally, some of it quite public, with allegations of greenwashing against some of the large asset managers. And whilst greenwashing can take many forms, ranging from imprecise claims to those that are intentionally meaning to mislead, there's a risk that any greenwashing can compromise the incredible work that's taking place across the market to protect and enhance investment outcomes through a focus on ESG. So in this session, we're going to explore how funds can reduce the risk of greenwashing and the developments on the horizon that might help with that. So I'm very pleased to welcome Claire Labouchardiere, who is going to speak to us about ASIC's work in this area and to outline what ASIC, the recent statements put out by ASIC, and we will have some time for some questions afterwards, so get thinking. Welcome, Claire.
Thank you, Louise, for the introduction, and good afternoon, everyone. I do want to say thank you to AXI for inviting me to speak today and present the regulator's perspective. We really welcome the opportunity. I want to begin today by acknowledging the traditional owners' custodianship of the lands on which we meet today, and to pay my respects to elders past and present, and I extend that respect to any Aboriginal and Torres Strait Islanders joining us today. As we've heard throughout the conference today, climate change is one of the most significant issues globally facing governments, regulators, markets, and the community more broadly. And in Australia, we've only seen a renewed focus on this issue with the recent change of government. From ASIC's perspective, we've been focused on climate-related disclosure and governance issues for a number of years now. It really does sit squarely within our mandate of efficient capital markets, but also from your perspective, confident and informed investors and consumers. Today, there are 3 regulatory developments that I wanted to talk about. So the first, as Louise alluded to, is our recently issued information sheet on greenwashing. Secondly, I wanted to talk about some of the international developments on sustainability reporting, including the ISSB standards that we heard about from Sue Lloyd. And then thirdly, I wanted to talk about what some of those international developments mean for the Australian market and for the role of ASIC as the regulator. And some of what I cover today will be relevant to you in your capacity as issuers of financial products, and some in your capacity as investors and users of corporate information. So turning first to the greenwashing information sheet, so it was released last month. It's numbered 271. You can find it on our website. And when we talk about greenwashing, we're really talking about the misrepresenting the extent to which a financial product or an investment strategy is sustainable or green or ethical. And the reason that we're focused on this area is just the huge growth that we're seeing for both the demand and supply for sustainability related products. To give some context, ESG assets are projected to exceed 53 trillion by 2025, representing more than a third of the 140 trillion in projected total assets under management. And then closer to home in our region alone, we've seen sustainability labelled investments double between 2019 and 2021. Now, with this increasing demand and supply, of course, comes the increased risk of greenwashing, and that's what is, of course, ASIC's area of focus. So our information sheet, as well as some consumer guidance that we published at the same time, followed a review that we conducted looking at disclosure practices by superannuation funds and managed funds in relation to some of their sustainability-related products. And because there aren't accepted definitions about what sustainable or ethical and responsible mean, when we're looking at those disclosures, we're really keen to just make sure that investors aren't misled about a particular product, and they can make a good decision about whether it meets their particular sustainable needs, which of course can differ from investor to investor. And so the way that the information sheet is structured is it poses a series of 9 questions that product issuers can ask themselves when they're preparing their disclosures. That's both the formal PDS disclosures, but also marketing and advertising more broadly. The key thing to note is that it doesn't create any new obligations. It's just about helping issuers to navigate the existing regulatory requirements, including the prohibitions on misleading and deceptive disclosures. And it does draw on existing guidance that we already have in the market. So we have regulatory guides about good advertising practices, for example, and also around how to disclose ESG considerations in PDSs. So a lot of the concepts in the information sheet will be very familiar to you. We did identify some areas for improvement in our review, and those are the things that are reflected in our information sheet. So at the heart, it's about making sure that a product is true to label. So does the name reflect the substance of the product itself? Another key point is that to make sure that any sustainability related terminology is clearly explained. And this sort of goes back to the point before that we don't have those accepted definitions. So what it means to you, it's really important that there's clarity around that and avoiding vague terminology. Thirdly, just be clear about how sustainability related factors feed into your investment decisions, feed into your stewardship activities. That's really important for investors to understand. Make sure that any headline claims that you're making about sustainability related issues aren't misleading and that are consistent with content across your other disclosures. And then most importantly, and I think what we've touched on a bit today, is to make sure that any forward-looking statements or sustainability targets have a reasonable basis. And I might unpack that last point a little bit, because we are seeing, more and more entities making public statements around net zero claims. And we heard the figure this morning, but it's worth repeating. In ACSI's recent report, it did show that 2/3 of the ASX 200 have set at least one emissions reduction target, but almost half, so 95 companies across the ASX 200 have adopted net zero commitments. And that's doubled since the previous year, so it is growing year on year. Now, under the law, for any forward-looking statements, you must have a reasonable basis, otherwise the disclosures could be deemed to be misleading. So you can't make a purely aspirational statement, you need to have a basis there. And in our information sheet, we do set out some tips on how to navigate this. So basically it's about being really clear about what your target is. So does it extend to Scope 3 emissions, or is it just about Scope 1 and Scope 2? What's your time horizon? Do you have interim targets along the way? And just being really clear about what your plan is to achieve it. Now, I guess it goes without saying that what is reasonable is really going to depend on the particular circumstances, but ASIC as a regulator, of course, would be really concerned if we saw a net zero claim without a plan as to how the maker of that claim is planning to get there. There is other guidance out there as well. So the TCFD released some guidance in October last year around metrics, targets and transition plans. So if an entity is considering making a net zero claim, that's a useful source of information. So what's next for ASIC in terms of greenwashing? Well, it is, and it will remain a priority area for the Commission. I should say the aim of our information sheet is really about lifting disclosure standards. So we would encourage issuers to have a look at it when you are making disclosures in the market. It is something that we will be keeping an eye out for in our day-to-day supervisory work. And I should be clear that is across our regulated population, so listed companies as well as product issuers. And we do have a range of tools that are available to us, and if we do see egregious action, then we would consider taking enforcement action. But we are appealing to industry, including yourselves. You're often much closer to this than we are. If you do see problematic conduct or greenwashing claims, then please do reach out and let us know. So I'll turn now to recent sustainability reporting developments. And we just heard from Sue Lloyd about the establishment of the ISSB and its goal of achieving global baseline sustainability and climate-related disclosure standards, and of course the 2 consultation papers that were released in March this year. ASIC has publicly welcomed the establishment of the ISSB. We see it as a really major step in setting global sustainability standards and addressing climate risk. We see the value in consistent, comparable and relevant information because it is so important to good investor decision-making and appropriate pricing of risk. And we did encourage stakeholders who have an interest to make submissions, of course due tomorrow, because we think it is important that the Australian perspective is heard. So what are we doing? Well, we're part of IOSCO, which is the International Organisation of Securities Commissions. So that's us and our regulatory counterparts around the world. And IOSCO has set up a sustainable finance task force, and within that a working group, which we're part of. And that working group has been reviewing the exposure standards with a view to providing feedback to the ISSB, and with the view to possible endorsement by IOSCO of the final ISSB standards. Domestically, we've been engaging through the Council of Financial Regulators Climate Working Group. So that brings together ASIC, APRA, RBA and Treasury. And together, the four agencies are putting in a joint submission to the ISSB. In preparing that submission, a really important factor for us was hearing the views of industry. And so we did, through the COFA working group, conduct a couple of investor roundtables. And the key themes that came through those discussions, importantly, was really broad support. So for the establishment of the ISSB and the objectives it was trying to achieve. We did get some feedback around mostly the way that standards might get implemented here in Australia, and a lot of it echoes what Sue mentioned that she was hearing internationally. So the need for some transitional and phasing requirements here, acknowledging that all companies are at different stages of the journey. But also a need around proportionality and scalability. So given, for example, we do have a vast number of small and medium companies on the ASX. And then that general theme, which we have heard a lot about today as well, which is the need for further guidance, but upskilling across the ecosystem. So we do know that the ISSB is sort of working at pace to standardise sustainability reporting, but we are already seeing some jurisdictions around the world having already taken steps towards mandating climate-related disclosures, so the EU, the UK and New Zealand, and of course the US has also been consulting on mandatory climate-related disclosures. I think the important point to note is that Australian companies could get impacted by some of these developments. They could be caught directly if they meet the statutory test in some of those jurisdictions, but they also could start to face pressure from investors, especially when they're competing for capital in some of those foreign jurisdictions. And so that just emphasises to us the importance of really establishing that global baseline consistency across the different initiatives. And we were very supportive of the ISSB's initiative in April this year to set up a jurisdictional working group, which brought together some key jurisdictions, so the US, UK, Japan, China and EU, to start that dialogue around some of those compatibility issues. So I'll turn now to the domestic setting, and the question of whether or not mandatory disclosures will be introduced here in Australia is a matter for the government, not for ASIC, but we do note that the current government has a policy around greater transparency in this space. For us, our priority is really twofold as things continue to develop both internationally and domestically. The first is to continue to foster improvement in governance practices, and we have heard a little bit about that today, but we really think companies ought to be taking quite a proactive and probative approach to thinking about climate change risk and what it means for their business, and then seeing that flow through their governance and strategy and risk management processes. And secondly, to continue to foster improvements in disclosures by listed companies to enable investors to make good decisions. There are existing obligations that apply under the law as it stands around disclosure of material risks. To help companies do that and to increase the sophistication of the disclosures that we're seeing, we do encourage companies to report under the TCFD framework on a voluntary basis, and that's something that we've been doing for about 5 years now. I think it's only more important now than ever because we think companies that are reporting under the TCFD framework will be in a really good position to report against any future standards, especially given that the ISSB and some of the foreign requirements are based on the 4 pillars of the TCFD framework. We certainly are seeing greater adoption of the TCFD framework by large listed companies. So again, the ACSI report showed that more than half of the ASX 200 companies were reporting either fully or partially against the TCFD framework. So again, huge strides are being taken there. From ASIC's perspective, we recently conducted a surveillance exercise looking at TCFD climate-related disclosures by some of the larger listed companies. Overall, we did see a lot of steps have been taken, but there is still room for improvement. When we look at the disclosures across the market, there certainly is a lack of consistency and comparability. The voluntary nature of TCFD reporting does mean that we sometimes see selective adoption of some of the recommendations. And when you think about things like scenario analysis, again, we often see different scenarios being applied, different timeframes, even for companies in quite similar industries. And again, I sort of mentioned the different sizes of companies on the ASX. We have observed lesser engagement once you get out of the ASX 300 on some of these issues. So progress has been made, but there's still room for improvement there. Moving forward, we've heard talk about collaboration, but we absolutely do think that collaboration is going to be the key to seeing regulation evolve in this space. From our perspective, we'll continue to engage internationally with our peers at IOSCO and then domestically with the other COFA agencies. But hearing the industry perspective is going to be really important in all of this as well, both in, as corporate reporters, but also as investors and users of information. So to conclude, I'll leave you with 2 messages from ASIC. The first is for product issuers. Do have a look at our information sheet on greenwashing if you haven't already. It is something to sort of guide your preparers of disclosures to avoid greenwashing, but also to fundamentally to make sure that investors have got the information they need. And then secondly, in relation to climate reporting, if you are a reporting entity, this is an area that's moving very, very quickly. We would suggest not waiting until we have mandatory disclosures. There are rules that apply now, so start thinking about your governance arrangements, and if you do have material exposures, we'd encourage you to start reporting under the TCFD framework. So thanks again, and happy to take, well, we're having a discussion, so I'll sit down and join you now, Louise.
Thanks, Claire. Thank you, Claire. Okay, now, let me see, are there any questions immediately in the audience? Yep, we've got one down here. Just get a mic to you, and if you could say who you are and where you're from when you start, please.
Thanks, Louise. Claire.
Keep speaking, it'll come.
Okay, Claire, Mark Bland from Mills Oakley. Just have firstly, the greenwashing information statement is fantastic guidance, particularly for superannuation trustees, and shows the work you're doing internationally. I was interested at the start. There's a very strong view of something which I wasn't sure about when I started to read it, as to whether a commitment to reach net zero in a certain period of time is actually a statement of a future matter, or just a statement of a present attitude. So whether there's the concept of forecasts and requirement for a reasonable basis does apply, and does it apply depending on what you say, or is ASIC's view that it's clearly a forecast and therefore requires reasonable grounds?
I think it is tricky because it's always going to depend on the particular context of a disclosure, but generally we would say that yes, a net zero commitment is a forward-looking statement that should have a reasonable basis. So there should be a plan around how an entity intends to get there. To give you some examples, one of the things our team does is that we review IPO prospectuses, so when a new company is coming to market, and we have seen amongst some of the smaller companies, they have made net zero claims, and when we've asked questions about it, it's become quite clear that those statements were more of an aspirational nature or more in the form of a marketing type statement. And so that's where we have reached out and asked questions, and as a result they've changed their disclosure to either modify the statement to be clear about what it actually is, or removed it altogether. So that's just to provide an example.
That's really interesting. And I guess following that up, Claire, do you anticipate taking enforcement action based on the review that you've undertaken, or is this an acknowledgement that we've moved quite quickly into a new area and people are learning and need to learn pretty quickly where the boundaries are?
It certainly is an evolving space. And the approach that we've taken when it's come to corporate reporting of climate-related risks and opportunities is that we've been watching the market as it evolves and trying to encourage and foster TCFD take-up. So that's sort of one context of the approach that we've taken. But greenwashing is an area of focus. So our first priority is really to lift disclosures, as I said. So that's the aim of the information sheet, is to set out what our expectations and to show the kinds of issues that through our review we thought could be improved, so everyone's on the same page. But if we do see egregious conduct, then, as the regulator, we do have to give thought to whether it's appropriate to use our enforcement tools.
Is there another question in the audience? One right over here.
Hi Claire, Rachel Allen Backus, FS Sustainability. Is the lack of clear definitions on ESG-related product in the way that the EU SFDR or the proposed rule changes by the US SEC, does that represent a barrier for ASIC monitoring greenwashing? And as a follow-up, would ASIC consider adopting common definitions, either developed by yourselves or as a result of the ASFI taxonomy work?
Yeah, it's a good question, thank you. And we have seen the approach of regulators overseas develop over time. So I know in the UK, for example, the first step they took was issuing principles, which is quite similar to our information sheet in many ways. And then now they're on the journey towards possibly introducing particular fund labels. And I know in the US SEC, they're consulting on something very similar. Our view is that that's probably a call for government as to whether we do have particular definitions or labels. And so our information sheet is really about the existing obligations around misleading and deceptive, and trying to foster that clarity of disclosure.
So I guess a follow-on from that, Claire, is whether ASIC sees a role for the development of an industry-led taxonomy as being helpful in this regard, or do you see really a need for government to step in and provide clarity?
We're very supportive of the work that ASFI is doing, the Australian Sustainable Finance Initiative. So ASIC has been observers to the ASFI process, even in the previous iteration. We continue to be so at the moment, together with some of the other COFA agencies as well. So we're quite closely watching the development of the industry-led taxonomy project. I think it's really important for us to hear industry views around some of it, and I know that it's going to draw on some of the experiences of other international regulators, which I think it's really important to sort of build on what's already happening elsewhere. Another way that we're sort of thinking about it is through our Council of Financial Regulators Climate Working Group. So one of the things that we do is to monitor international developments and then think about what that means for the Australian context. So we are keeping an eye on things, for example, the EU taxonomy as it evolves.
I'm afraid that we have run out of time, but it's a really interesting area, and I'm sure that by the time we hold our conference next year, there'll be much more to talk about, perhaps even some examples, live examples. So join me please in thanking Claire.